Thank you for your time and joining me in this brief guide on our comprehensive 5-year financial model for startups, which now features an investor and valuation scenario. It's designed specifically for early stage businesses and it offers dynamic projections, 5 valuation methods, and investor focused analysis to help startups validate their ideas and secure funding. So let's explore its unique features and how they can empower your business. The model is designed for simplicity and clarity. Now, on the dashboard and the input sheets, there are guided input areas with cells highlighted in yellow with blue text. These are the input cells throughout the sheets. It ensures seamless navigation and all inputs dynamically update across the model for accurate and timely projections. So whatever you do in the input, cells will automatically calculate it for you. So if you take a look here at an example, row 17, if we change the 500,000 Australian dollars to 1 million, you'll see automatically the relevant cells update. Also very important is this 5-year financial model allows you to also project for year 4 and for year 3. You see what happens here if we select year 3, the model cleans up, so the irrelevant years, in this case year 4 and 5, automatically taken away and the model cleaned up for you. And this is done because some investors want to take shorter term views of the projections of a company or project and also consider the evaluations based on shorter time frames. So this model is quite powerful in providing you with these 3 options: year 3, year 4, and year 5. If we look at the dashboard, all the relevant components that is needed to see or get a glimpse of the model. So the valuation conclusions, the return on investments, the debt available or the debt outstanding, the bank balances, all of that is captured here and automatically updated for you. Your inputs really starts here at the general assumptions, and I mentioned the yellow shaded blue text cells. This is where you would input the necessary components that's applicable to your business. Starting with inflation, working capital, aspects like tax, your dividend policy, funding, assumptions, interest rates, loan terms, moratorium periods, your cost of capital, which obviously drives your valuation. Very important as well, you will see throughout the model there are read notes. This is done to assist whoever the user is to tell them exactly what is meant by these various terminologies. So if we look at beta, it explains you exactly what beta is in the measure of, let's say, cost of capital. If we need to know what WACC is, it gives you an example of what WACC is and how we use that. Operational assumptions, your revenue channels, sales price, cost of sales, cost of production. This model allows you then to do up to 10 different rows of revenue channels or product categories or services. And whatever you input here, it will automatically update the rest of the model as well for you. As soon as you finish with the input sheets, the 4 input sheets we'll quickly discuss now, as well as this dashboard sheet, your income statement, as well as your balance sheet, and so too your cash flow statement is automatically calculated for you without you having to worry about still computing that. That's done for you. As soon as you make any changes, it will automatically update for you. All balance checks are in place, sanity checks, so to speak, showing you that whatever inputs you have done, the model is still in balance. There are still no issues in the model. Everything is okay. Financial ratios have been done as well for you without the need to try and figure out what the various ratios should be as derived from the 3 financial statements. And so to all supporting schedules that drives the balance sheet is done for you. Once again, you can see debt and balance. That's just a balance check that we've built in. Everything in balance here, you can see sanity checks all done for you to make sure that you're on the right track. First input sheet that's very important would be your funding. This is where you decide on how you allocate the use of funding that you're going to receive, whether it's buying new equipment, buying land, using it for inventory purchases or expenses, and also your structure in terms of your funding, whether it's equity, whether it's debt, whether it's a combination of the two. Right, so whatever you do here, whatever changes you make here, let's say for example, I take away the working capital here, you can see automatically the model shows you, listen, your lowest cash balance now is negative. Do you need more funding? Yes, you do. So automatically you see, okay, I'm going to need more funding. What do I do now? And here, if you just add the working capital where it was, you can see the balance is positive again in terms of cash, and you've got sufficient funding. Depreciation schedule is done for you based on minimal input on your end. So too, the operating expenditure just requires your input for the first year, and labor as well. Your years of appointment from year 1 to 5, your head count, your position names, everything is done here for you based on your input year. A very powerful sheet here, the company valuation sheet. Once again, based on your inputs, everything is calculated for you. Your return on investment, your various valuation methodologies, summary of your 3 financial statements, as well as the supporting schedules is done for you. Your various cash flows, cash flow to the firm, free cash flow to equity, everything calculated for you with the various checks and balances in place. Company valuation done for you, no need to still figure that out. And then your 5 methodologies as promised in the model. There's valuation method 1, number 2, number 3, number 4, number 5, and just for good measure, you can also add as a 6th one, net asset value. So if we return to the dashboard, you can see how all inputs integrate to provide a comprehensive picture of your business's financial health. Combined with the valuation sheet, this model equips startups with the tools to validate growth strategies and negotiate confidently and effectively with investors. So I thank you very much for exploring this comprehensive 5-year financial model for startups. With its robust valuation methods, dynamic projections, and strategic tools, this model empowers you to take control of your financial future. So start customizing it today to achieve your startup goals.